Hello, it's Friday the 21st, still too wet underfoot for the air wheel. I'm FX Blue and this is the market brief. So despite genuine concern that the Indian variant could cause delays, the vaccination programme is still driving the UK towards a full reopening of the economy. Boris remains cautious, but unless there's a major change to the data, it looks like the removal of restrictions remains on track. Inflation data showed that continuing higher demand and logistical delays, which are affecting the supply chain, are likely to see prices continue to rise over the next few months. However, the biggest test for the economic recovery will of course come when furlough ends in September. The Bank of England is unlikely to act beforehand, as the economy really isn't ready to shoulder higher interest rates yet. Similar to the US though, the market here is divided by those concerned that increasing inflation will reach a point where the bank does need to act, and those who see inflation as temporary or transitory. And that will even out over time. Sterling rallied yesterday towards 142 against the dollar, but despite the continued threat of a break higher, we ran out of steam at 141.90. Over in the US, the pressure remains on the Fed to reveal its big plans. Powell continues to use transitory to describe the rise in inflation, but the market wants it defined for when transitory might become permanent. His reluctance to commit here may be linked to quantitative easing. Remember when that was introduced, the idea of printing money was expected to risk runaway inflation. That didn't happen though, and the practice became a legitimate tool to add to monetary policy. But Biden's approach rather relies on international creditors continuing to play ball. As I mentioned yesterday, if China demanded higher interest rates for their continued buying of US debt though, it could bring everything crashing down. At the end of the day, China and the US do need each other though, but their uneasy relationship can't be considered a secure bond of mutual benefit, so that risk remains. The dollar index fell back to support around 89.80 when the penny dropped that the Fed wasn't going to act. And euro dollar reached 122.30 as the market considers a challenge to 122.50. Think we'll see that before the weekend? I'm not so sure. Perhaps a little profit taking before everyone heads to the pub. Right, that's it from me, just when the rain starts again, so I'm going to dash for cover. Join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.